Okay, we have good numbers now. So those of us just joining us, this is Rally Trade Morning Market Review. This is the session we normally have in the morning, 8 a.m. to 9 a.m. For those who are joining us for the first time, hear me fine. So this is a session we get to give you tips and tricks about the market, and of course, give you trade direction. Of course, do some analysis for you, and to just to make sure that you are good and of course you are profitable, right? You're profitable on the market. Okay, so just like we always do, we try to look at the news, right? The fundamental events that affect the market, because fundamental events are the primary driver of the market, right? So the main thing that moves the market is fundamental. I can tell you that because fundamentals have no respect for technical analysis. Okay, so being a technical trader is good and awesome, but you also need to check for news, right? Because news comes with a very large momentum that can shift the direction of the market. So let's start check for news. Let's start by checking for news. Okay, so the website we normally use is Forex Factory. The other website you can use investing.com, www.investing.com. You can also use trading economics, so many other websites. Okay, so let me share my screen right now with you. So I've been able to share my screen with you, confirming if you can see my screen. I'm sure you see my screen, right? You see my screen. So this is Forest Factory. So to get to this particular website, very simple. On your browser, Chrome browser, you can just type at the address bar, you can just type www.forestfactory.com. Okay. Sorry, I'm really trying to keep it very simple because we have newbies, right? So every week we have newbies joining us. So I'm trying to keep it very simple so that they also get value from it. Okay. So on this website, you get to see fundamental events and of course news that affects the global financial markets, right? So you want to always check this website in the morning. Don't forget, right? Always check this website. The reason is if you don't check the website, a news event can affect your trade, right? And most persons don't put stop loss, so it can affect your trade. So you want to always check this website. So if you open this website for the first time to show you the news event for that particular day, like if you look carefully, I'm sure you can see my mouse pointer. So if you look carefully, you will see that this is 18th, right? Uh, Tuesday, the 18th of July, right? So, and of course, that's the only news I have here. Hmm? So if you want to check, if you want to see the news for the whole of the week, you click this button up here. Just click calendar up here. It shows you the news uh, for 1 week. So this is news for 1 week right now. So Sunday, Monday, Tuesday, Wednesday, Thursday. So let me try and keep it a little bit short. So we want to concentrate on the impact of the news. So the impact of the news talks about the volatility we are expecting, right? So as a trader, that word volatility should not be far from you. Okay. So volatility is the rate at which the price do change with respect to time. Okay. So usually uh, we'll focus more on the impact. Okay. So the one with yellow color, as you can see, is low impact. We don't really deal with that. So the one with brown is medium impact. It can affect the market, but our focus more is on the red. Okay, the red impact news. Like for today, being Tuesday the 18th, you can see red impact news on AUD. That's 2:30 a.m. Of course, that's a monetary policy meeting. That one has passed. I'm sure it affected the market. That's just a meeting. Now, of course, you see the currency it also affects. So for today, 1:30 p.m., we're expecting a news on Canadian dollar. Okay, Canadian dollar, and that news is on CPI. CPI is Consumer Price Index, right? So it measures the changes in the price of goods and services as purchased by the consumer. So it is used to track how prices are changing, right? How prices are changing. So at the far right, you get to see the result of the news. Okay, so this is where you get to see the result. The result is the actual. So over here, you get to see the result. So that result will be out by 1:30 p.m. today, Nigerian time. So for the newbies, if that result is greater than this other value here, which is the forecast, that means the Canadian dollar will appreciate in value. Okay, but if it is less than, right, the sentiment will drive the market, the Canadian dollar lower. Okay, so you want to look at for the values here. For example, now see the CPI. This CPI here over here, the forecast is 0.3%, right? But the previous is 0.4%. That means the forecast is suggesting that the result will actually be lower, right? So you already have a clue that the result will actually be lower. But it may not be lower. Okay, so if the result comes out here and is greater than this forecast, then it means it will be good for the Canadian dollar. So you want to buy card. So by 1:30 p.m. you want to buy card if the result is good. How do you buy card? On currency pairs. Now this is for newbies, okay? On currency pairs like card JPY. Card is the base currency. So you just do a straight buy there by 1:30 p.m. On currency pair like USD card, USD card being the quoting currency, just do a sell. Selling USD card is a buy on card. That's if the result comes out good, right? Good. But if it comes out bad, then you do the opposite, okay? Now, for today also, by that 1:30 p.m., well, we also have a news again on USD, okay? That's called retail sales, right? So retail sales, which measure the total number of sales, right, that happens in the US. So if that value is good, it means the economy is expanding, right? People have more money to spend, okay? So if the value comes out greater than forecast, is also good, okay? Or less than forecast is bad. Now, that's what we have. So you want to keep an eye on this news. So you want to keep an eye on this news. Please don't forget. Don't forget. You can set a reminder. Keep an eye on the news. So from now being 8, this is 8 in the morning. From now till that 1:30 p.m. when we'll be expecting the news, you can trade the market with technical analysis. Okay, you can trade the market with technical analysis. Remember, knowing technical analysis makes you a trader. Okay. The technical analyst, you can decipher where the direction of the market is going. So that being said, please let me switch over to the chart. So someone is asking, what if the news comes out mixed, green and red? It means the market may likely the volatility will be high. It will go up, to come down, to go up, to come down. For example, if CPI month on month, which is the strongest here, this one, if this one comes out green and this other one comes out red, it means it will be strong, but it will not be very strong because this other one comes out red. But if all of them is green, it will be very strong. Okay, so that's the answer to that. Of course, if all of them comes out red, it will be very weak. So we have weak, it can be very weak or weaker and weakest. So depending on the values we have. Okay. So the best bet here, your best bet is if all of it should come out red, fantastic. If all of it should come out green, also fantastic. So let me switch over to the chart. So what should we trade card with? I just mentioned that you can trade a card JPY, okay, or any of the currency pair that has card. NZD card is also there. I'm sure the rest of you can hear me. Somebody just complained that you cannot hear me. I'm sure the rest of you can hear me. Okay. So if you cannot hear me, just check your internet connection. Christian, you asking whether buy or sell. It depends on the value, right? It depends on the value. Right now, you cannot know. But what I'm giving you is how to know what to do if the result is released. So if the result is released by 1:30 p.m. and is green in color, or the value you see here is greater than this forecast, then you want to buy Canadian dollar. Buying Canadian dollar simply means anywhere you have card as a base currency, right? Like card JPY, right? Then you want to do a buy. But if card is the equity currency, then you want to do a sell, please. All right, so let me switch over to the chart, right? So because we normally spend bulk of our time on the chart. For those who are just joining us, I can see more persons in the room. Thank you for joining us. So this is Rally Trade Money Market Review, right? I am Emmanuel Odogwu, right? So thank you for joining us. So we'll just switch over to the chart right now. So please take note. This this money market review, we are live streaming it on Zoom, right? So you can also watch it live on Zoom. Okay. So if you miss any of the money market review, you can simply go back to Zoom. So we are live streaming on YouTube rather. Sorry, not Zoom, YouTube. Okay. So if you miss any of the session, you can later go back to YouTube and of course watch the recorded session. Okay. Just type rally trade. Just type rally trade on YouTube. YouTube, please, not Zoom. Okay, we're already on Zoom right now. All right, so let me switch my chart. Let me switch my screen to my chart, and I'm using MT5 for that. So I have switched my screen. I hope you can see me, guys. Check if you can see me. Can you see my chart? YouTube link. The YouTube link. Just type rally trade. Just search for rally trade. Rally trade is now an household name. Just search for rally trade. Then you will see the recorded version on YouTube, please. All right, fine. Thank you. You can see my screen right now. So let's look at the technical analysis side of things. Okay. So I think I am on USD IDX, USD IDX. So this is the US dollar index. So this is the instrument, right, that measures the strength of the dollar, the United States dollar, I mean, with a basket of other major currencies. So if you want to know the true strength of the dollar, then you want to look here.
Recording in progress.
If you want to know the true strength of the dollar, then you want to just look here, okay? Just come to USD IDX. Then, of course, you can find this USD index on your market watch, okay? So what I normally do is most of the instruments we do trade, most of them have something to do with US dollar, okay? Right? So 80 to 90% of the instrument we do trade is around US dollar. So you want to also know what is happening to the dollar, okay? Now, this is H4 time frame. Let's do small analysis here. Please, the kind of analysis we normally do is market structure analysis, okay? For your information, it's market structure analysis we normally do. So because the market structure is simply the language of financial market. So you want to understand the language the market is trying to communicate, okay? So over here, the price was jumping up, was going up, and that's upward trend, breaking structures to the upside. Then, of course, we saw a shift, right? We saw a shift. We saw a shift. So this is upward movement, and of course, this is a retracement to the downside. Then this is upward movement again. So I'm doing this for the new piece here, okay? So this low is supposed to be respected because this is the protected area or the protected liquidity. But guess what? It was not respected. The market took out this low. So once the market takes out this low, we say the market have shifted. And that's what we call change of character. So the market have shifted to the downside. So once you cite this kind of move, right, it means the market have shifted. So you should not be looking at for bullish conditions again, but rather bearish. So it was from here we saw the shift in the market direction. And sir, guess what? From that time till now, the market has been trading. USD IDS has been going down. That means USD has been weak. From the chart, remember, you want to trade what you see on the chart as a technical analyst. The decision we make on whether to buy or sell is from the chart, and the chart never lies. Come on now, the chart never lies. Now you can do nothing against it. The chart is the truth of the market, okay? And of course, you can do nothing against that truth. So it is best to get your information from the chart, okay? So from here, it has shifted, and from there, it started trading downward, as you can see. Of course, if the market is trading downward, you will always expect retracement, right? Which is healthy, right? For the market to gather more momentum, and of course, more sellers, I mean, then of course, push again to the downside. So you can see this mighty move, right? Now, most of this move was caused by the data, the employment data, which is NFP from the US, and of course, CPI, the consumer price index, which came out bad for the dollar. Okay, so that's why we have been seeing this movement downward. Okay, so we saw another retracement here to the upside. Guys, are you guys still following me? I hope I'm not talking to myself. So somebody should just type, "I am following you" or "I'm understanding you." Okay, thank you. I can see you there. Well done. Wonderful. Fine, thank you. So we saw a retracement to the upside here, right, which is also healthy for the trend, right, which is also healthy. Why is it healthy? It's healthy because that is the opportunity the market gets to gather more momentum to continue in the same direction. So retracement is healthy. Retracement is healthy for the direction. So one thing you want to do is to find out the direction, right? They also give room for retracement, retracement. So this is a retracement to the upside, and the market is about breaking structure again to the downside. But if you look carefully, using candlestick pattern analysis, we saw a bullish engulfing here. Bullish engulfing, and this is H4 time frame, right? And it's happening at the bottom. So we saw a bullish engulfing here. I mean, this big bullish candlestick, the body is far bigger, right, than the bearish candlestick. Okay, that's bullish engulfing. It means now these two candle means on these 4 hours, the sellers were dominating the market. But in the next 4 hours, the buyers took over the market from the sellers and, of course, start pushing the market to the upside. Okay, that's what it means. Okay, so that's a sign. That's a sign. That's a sign. But guess what? That sign is happening when we have a very mighty move to the downside. That sign happened when we have very mighty move to the downside. And of course, for yesterday, the market was able to respect this sign. That was why it traded up. If you notice, the market traded up a little bit. Okay. But for today, all of this movement inside this body can be termed as indecision, right? Indecision. Now, until this candle is taken out, so this candle has to be taken out for us to continue selling. For us to continue selling, this candle has to be taken out. Now, see what I mean by the candle has to be taken out. So let me draw a line here. So now the range of this bullish candle has to be taken out. So this is the range. So from the low to the high is what we call the range, right? So all of this movement inside this range can be termed as indecision, right? Indecision. So once the market breaks out from here, of course, it is breaking out from this bullish engulfing. That's number one signal, right? That's number one bearish signal on the dollar. Then number two is, of course, this is a low, right? So if the market breaks out from here, that's now a break of structure to the downside. Break of structure to the downside also is another bearish signal on the downward trend. Okay, so now bearish. I hope what I'm saying is not sounding too complicated. Okay, if it is, you need to join our. I'll drop my number. Okay, so you can ask me some specific questions, even here and of course of the Zoom meeting. All right, so we are still looking at it's bearish, but of course we are looking at kind of indecision. Okay, but of course you can see for today, right? You can see for today you can see this bearish movement, right? So that suggests that the BS is still dominating. Don't forget that. Don't forget that. Now, I want to confirm this with this fundamental website, financial visuals. Okay, I showed you this the last time I was here. Financial visuals. So let me show you my financial visual. So I want to confirm this weakness, right? We are seeing weakness. We are seeing weakness because if you go down to a lower time frame, 30 minutes or 15 minutes, you will see that the market is dumping, right? So if you go down to a lower time frame, so you can see a dump, right? You can see a dump. So let's confirm this weakness. Of course, if there's weakness here, it means all of the USD denominated currency pair. I mean, all of the currency pair that has USD as a putting currency will be going up. Like Euro USD should be going up, GP USD should be going up, AD USD should be going up. So let's confirm this weakness. To confirm this weakness, I'll just switch to financialvisual.com. So this is FinViz, right? So this is FinViz. So how do you get here? You just type on your browser, finviz.com. So once you type, okay, let me do it from the beginning for those of us just knowing about this website for the first time. Finviz.com. Okay. So here you get to see the relative strength of all the major currencies. Okay. So once it opens up like this, I'm sure you can see my screen, guys. I'm sure you can see. I'm sure you can see my screen. Okay, I can see you there. Fine, thank you. Thank you, guys. So once it opens up to this website, you just click Forex here. Okay, that is the foreign exchange. Just click there. Then of course it opens something like this. Then you want to click on the performance at the top left area. So click on performance, and of course it shows you this. So this is where you get to confirm the strength of the one-day relative performance on the against the US dollar. Okay, so currencies towards my left are the strong currency. As you can see right now, guys, euro is a strong currency. So for those of us that like to scalp the market, scalp means you want to enter the market and any small profit you see, you are out very fast, 10 pips, 15 pips, you're out. We call it scalping the market. Okay, we call it scalping the market. So if you like scalping the market very well, this website will be very useful for you. So it means you want to just buy the strong currency towards the left and of course sell the weak currency towards my right. So as you can see right now, euro is the strongest currency from what we are seeing right now, and of course followed by CHF. Of course, the weakest here is NZD. Early this morning it was US, but USD have shifted a little bit. Okay, so that means trading euro NZ, it means you want to be buying, right? So even if you open the chart right now of euro versus the New Zealand dollar, euro being the base currency, of course, the chart should be pumping up, should be going upward, right? So you want to wait for a little retracement, right, for a better price before you can do a buy. So the reason why I'm showing you this is for CAD. So you can see here that CAD, sorry, is for USD. You can see here that USD is at the far right. Okay, so that's weakness. That's weakness. So guys, we have confirmed the weakness. So I don't know if I'm talking too fast. I'm trying to meet up time. Okay, I want to believe you all can hear me. Okay, thank you for giving me support there. It's finviz.com. Thank you guys. Thank you guys. You guys are wonderful. You guys are wonderful. Wonderful. Thank you. All right, so we have confirmed the weakness. We have confirmed the weakness. So what are we going to do? Since we have confirmed that weakness, right? Let's go back. Let's go back to our MT4, MT5 rather. This where. So I can see more persons in the room. That's good. That's wonderful. So if you're just joining us, this is Rally Trade Morning Market Review. My name is Emmanuel, reaching you from the beautiful city of Port Harcourt. And we are looking at the technical analysis side of things. Okay, so let's start from Euro USD, guys. Let's start from Euro. So I'm going to be very fast, okay, because I've showed you the US dollar index, right? I'm going to be very fast, okay? So let's start from, I hope you understand that. So if you have been following up this analysis, you notice I normally like to look at H4 time frame, right, before looking at other time frame. The reason is I want to look at what the big money is doing. Remember, the market is divided into two. Come on, guys. We have the big money and of course the small money, right? The big money drives the market, gives the market direction. The small money, like you and I, our job is to follow the direction, guys. Is to follow the direction. So follow the direction. Guys, guess what? Look at Euro USD. What direction can you see? This thing is pumping to the heavens. It's going up, guys. This thing is going up. It's going up. So, you notice the market was trading upward from here, right? Did as if it broke structure. It actually broke structure to the downside, right? Then, of course, created two equal lows, right? Then from there, it started going upward. So the market is going up, right? So everybody can see that this is going up, it's pumping upward, right? There will not be need for drawing all of these my regular lines. You know the lines I normally draw, right? So the market is already going upward. So if it's going upward, now let's look for a buy opportunity. Sir, the first thing you want to do is to register your directional bias. Okay, so have a bias. You should have a bias. So the bias right now is bullish. Okay, so if the bias is bullish, then you want to look for good entries. Of course, you know, good entries for a bullish bias is low prices and of course discounted prices. So I would like to go down to a lower time frame. I might just use 30 minutes. Right, 30 minutes for intraday traders, right? Now, as you can see, I have this indicator that shows me support and resistance. So this one has turned to code support. So that means it was a resistance that has turned to support. So I want to do a buy here. Remember, the bias is to buy. I am not just buying, right? The bias has been to buy, right? So I would like to do a buy. I would like to do a buy on this level, right? On this same level. But guess what? While we're analyzing it, the market has left us. While we're doing fundamental analysis, the market have left us. So what can we do? Now you can choose to, it's still early, right? It's still early. So two things you can do. Number one, you may want to enter with a smaller loss size, right? Yeah, that's my method. You may want to enter with a smaller loss size, wait for retracement to enter with a bigger loss size, okay? So that's what you can do. So that means for most of us here, aggressive traders, you may want to enter a buy right now, right? For those of us here are conservative traders, what you want to do is to wait for a little retracement. Now, guess what? Sometimes the market may not give you that retracement, just like what Ray Dalio said. And I hope you know Ray Dalio. Ray Dalio, one of the CEO of one of the big hedge fund we have in the world, he said there are two ways you can make money on the market. He said one way is to be aggressive to make money. The other way is to be conservative. Now, as a trader, for you to do very well, you can combine the two, aggressive and being conservative. So one of the ways you can do that is to be aggressive with a smaller lot size. If it comes with a retracement again, then enter with another one. So, but from what we saw on Finvis, we saw some strength, right? Guys, don't deny me. We saw some strength. So that strength, we can choose to take advantage of that strength. Okay. So I'll just enter with a smaller lot size there. I'll just do 0.02 there. Now, of course, that will be a buy. Guys, remember directional bias, right? So our bias is still a buy. So now this kind of trade is for intraday. Don't forget, it's for intraday. It can still work for swing. You know why? You know why it can still work for swing? Because we saw the H4 time frame. For swing traders in the room, we saw H4 time frame, right? And the H4 time frame is bullish. It's bullish. It's bullish. The H4 time frame is bullish. Of course, looking at H4 time frame gives you a directional bias. So, of course, this is analysis for Euro USD. Let's not waste time on this. Guys, I hope you guys are following. Enough message in the chat room. Okay, you say I'm a newbie, please. I don't understand all of this. Okay, Rome was not built in a day, sir. Don't worry, you understand it. Okay, you can get to our office depending on where you are your base. So you can get our office in Lagos, in Ibadan, anywhere you are in Abuja. You can just get to our office or in PH here, right? Just come straight to the office and of course attend our basic training, okay? Or you can join us online, okay? Of course, I'll drop my number at the end. Okay, you're asking for my MA. Now, it is either answering all of these questions is good, but it's going to take our time. So the MA is 50 and 21, okay? Finvis.com. So we just entered an instant buy because of we are trading what we are seeing on the chart, okay? So it's best to follow what you see on the chart. Thank you. Most of you are doing a very nice job. You are even responding on my behalf. That's good. Thank you. Please. Okay, you love to join the online training. Okay, so just contact your account officer. The account officer will give you more details. So you're asking if the film is a daily trend. Okay, what we saw is for 1 day. Okay, so you can check for week and of course for months. All right, so let me go back, guys. Guys, we are done with Euro USD. Let's look at GPUs, guys. So just like I always do H4 time frame, you know, it has become a tradition here. Come on, guys. So let's look at GBPUSD. So GPUSD, of course, you can tell that this thing is pumping upward. Okay. For those of us joining us for the first time, let me introduce this to you. So this is what I normally use to know to draw the market structure. So this is impulse to the upside, retracement to the downside. Another impulse to take out this high, which is to tap this liquidity above this high because it is target liquidity. So it comes up to this level, and of course we got a retracement to the downside, right? Again, then of course another impulse. Guys, I'm sorry I'm talking fast too, because this section runs from 8 to 9. Okay, so we just have barely 26 minutes. So another impulse again to the upside, right? And of course, the market gave us a retracement. Guys, take note. After there is a break of structure to the upside, the remaining movement is just an extension, and that extension can go any length. Okay, so see what I mean. This was the break of structure. This was the break of structure to the upside. A break of structure means once the price goes above the high or low, as simple as that. Okay. So there is no difficulty in it. So once the price was able or is able to break above the high in the direction of the trend, we call it break of structure. Okay. So this is a low, right? It came here. The target liquidity is this high. It moved up and took out this high. Okay. So once it takes out the high, any other further movement is just extension because we'll be expecting retracement. So soon enough, the market gave us retracement, and this is the retracement. And of course, from here, it wants to pump up to the upside again. Okay, so our directional bias here our directional bias here is still bullish, guys. It's still bullish. It's still bullish. Please take note. Anytime you want to trade, you want to have a directional bias. Okay. If not, you will just be doing buy before you know sell, buy, sell, buy, sell. Before you know, you have lose money. You don't trade like that, guys. Have establish your directional bias first. Then from there, go down to lower time frame. Then of course start picking your trade from that lower time frame. Okay. Then of course you are guaranteed to do it. So let me go down to a lower time frame. Let me look at 30 minutes time frame. So if you watch some of my recorded videos, you will notice that I normally look at H4 time frame, then come down to either 30 minutes, 15 minutes. So there I actually look at 5 minutes time frame. Sometimes I can even place my trade on 1 minute time frame. Okay, so it's called top-down analysis. So that means I'm not just looking at only one time frame. I'm just looking at only one time frame. I'm considering several time frame. Okay, so this is the lower. This is M30, and on this M30, what can we see? On this M30, what can we see? Remember, we are running on a bullish bias. Okay, don't forget that it's still a bullish bias. It's still a bullish bias. Okay. Okay, can see more persons joining us. That's good and fine. So, what can we do here? Remember, you want to buy on the support, right? So these are supports. These are the support the market has created for us. The market has created this support area, right? So this is the support confirmed by a this candlestick is called hammer, right? And hammer is a bullish signal. Okay, this candlestick you're seeing here. I hope you can see this candlestick. Okay, that's hammer. So we are bullish, guys, but I don't want to buy at this untested resistance. So I want to wait for a retracement. So you want to do a buy. So you want to do a buy if the price can come down a little bit again. So I'll give you two entries. Okay, two entries. That's one. Now, of course, this will be the second one here. Okay, because these are the two supports, two entries. So if you have two entries, like what can you do? You can divide your lot size, guys. You can divide your lot size. So let's say your normal lot size is 0.05. So you can enter with 0.02, the smaller one first. If you have more retracement, then of course you now complete it with 0.03. Okay, we call it stacking. Okay, stacking. The reason is you want to take advantage of every level of the market. So if we have a retracement to this level, so you can buy at 1.30707. So around this area, you can do a buy, right? So that will be a buy limit. So guys, you can set buy limits around this area. 1.3070707. Okay. Then of course, if you retraces further, you can do another one here. Then of course you can have your take profit at the resistance here. So take profit at this level 1.31245. Okay. So guys, this is the analysis for GPUSD. Let's look at another instrument. I'm trying to do it very fast so that we can cover as much as before 9 a.m. this morning. So let me look at USD card. Or do you have any instrument you want us to look at? I mean currency pair, okay? Because I'm certainly going to cover indices and of course and commodities. But for currency pair, for stop loss, you're asking for stop loss. So for stop loss, sorry guys, for stop loss, let me look at more movement we have here. So for stop loss, you want to do for an intraday guy, okay? You want to do a tight stop loss for an intraday, okay? But guess what? Since this market is bullish, your stop loss has to come down as low as, because the market will tap the liquidity below and still go up. Okay, so for stop loss, you can use this as a stop loss just below this low. Okay, now this is the low I am actually looking at, this low, because it was from here that the market started impulsing to the upside. So this can be your stop loss. This value 1.30415. But for those of us that want to swing the market, why not? The market is still very bullish. You may not want to use the stop loss. Okay, so you may want to bring your stop loss down even further. The reason is still bullish, so that it not just kiss your stop loss, and of course still go in your direction. Okay, now let me which other instrument would you like us to look at? USD JPY. Okay, wonderful. USJPY. But I think I was already on this card. So after this card, we look at USJPY, they dive into gold. Okay, dive into gold. Uh, so for USD card, we can see here. So after USD card, I'll just look at USD JPY to honor your request. Then from there, we can now go to gold. Okay. So on the H4 time frame, guys, look at what we have here. Let me reduce my zoom a little bit. So you can tell that this instrument is still pushing to the downside, right? It's still pushing to the downside. So this is where we saw, this is where we got our change of character, if you like, shift in the market direction. Okay, so we saw a retracement here to the downside. We got an impulse to the upside, guys. Then of course we saw another retracement. Okay, that took out this low, took out this low. Come on now, that means we are now going to the downside. Okay, now so until this high is taken out, this high verified resistance, you can see here, until this high is taken out, we are still going downwards, sir. So it may just go up to tap the liquidity up there, right? Then of course, then from there, gather enough momentum to start going down. So as we have it right now, this level still remain our target liquidity. Of course, target liquidity or target points are areas you want to use as your take profit. Okay, so as long as this market is concerned, looking at the chart structure, market structure, I mean, we are still going down. Okay, so on USD card, on USD card. So but we are slightly seeing some movement to the upside here, right? But if you look carefully, you will notice we have a bearish engulfing here. Don't forget, guys, we have a bearish engulfing here, right? By bearish engulfing, I mean a big bearish candle on the H4 time frame is big enough to cover this bullish candlestick here. Okay, so all of this internal movement inside can be seen as indecision. Okay, indecision. So see what I mean. So you may want to do something like this. So for as a swing trader, so I don't want to take a trade direction until the market either breaks or trade above the high of this. Let me zoom in more so that I can see it bigger and bigger. Fantastic, it's bigger now. So I don't want to take a trade direction on as a swing trader, right? So I want to wait until the market actually breaks the high of this candlestick so that to be out of the indecision or breaks the low. Yeah, that's for swing traders. Okay, but for intraday, if I go down to a lower time frame, I will still see areas where I can enter. Okay, now let me go down to a lower time frame. So that will be 15 minutes time frame. So this was that box we do. Let me move it. All right. So remember, I still want to do follow the higher time frame, which is bearish. So I want to sell. I would like to do a sell, right? If the market can tap this level again, if the market can tap this level again. So this level can be termed as a supply zone. Okay. So once this market tap here, I want to sell. So you want to sell anywhere around 1.32240 to 1.32355. So around this area, guys, you want to sell. So if this market can can move up a little bit above this area, okay, so that will term as a premium price. Remember, if you want to sell, you want to wait for a higher price, which we call premium price. Okay, so if this market can come up above this anywhere around this area, I would like to do a sell. Okay, so let me call the price again for you. A sell at 1.32240 to around 1.3235. Remember, it's a zone. Okay, it's a zone, and of course your take profit can just be a little bit above, right? So that will give you a good risk to return ratio. The reason is your risk limit will be very small, and of course your profit target, of course, you want to use here as your profit target, right? Profit target. So this will be your entry, and this will be your stop loss level of course, this will be your take profit. So let me look at USDJPY to honor that request. You're asking for my time frame. You can see the time frame at the top left. I was on H4 time frame, and then I nosedive to 15 minutes time frame. Okay, so let me look at USDJPY to honor your request. USDJPY. Okay, so USDJPY here. Wonderful. Look at what NZUS is doing. So sweet. So USDJPY. Let me honor your request. So guys, this is USDJPY. From what you can see on the H4 time frame, this is massive movement to the downside, right? Massive movement to the downside. So please, after USDJPY, I just go straight to gold, okay? Of course, look at some of the other commodities and then look at indices, okay? Now, this is USDJPY. From what we are seeing right here, we are already seeing massive movement to the downside, right? So this is impulse. Of course, this is retracement to the upside, right? So I'm doing this so that we can know where we are, right? So this is another impulse again, break of structure to the downside, tap this target liquidity here and trade lower to establish a new low. So of course, for elementary technical analysis, so this is lower low, guys. This is lower low, okay? Lower lows. Then of course, ideally it's supposed to just move up a little bit, not to go higher than this high. So it went higher than that high, right? Now there are two ways to look at this thing. Number one, you want to also consider how massive the market has been dropping, okay? Because this retracement is a very small retracement. But guess what? If the momentum is also high, the market can equally change direction from there. But from the market structure analysis side of things, now we have already tapped this protected liquidity, okay? So we are already seeing some slight shift here, okay? Why? Because we have tapped this this high. So then of course it gave us a good retracement. So even if you use Fibonacci there, you will see that retracement it gave us is somewhere around less than our discounted level. Okay, so immediately it tapped this level, you can just use Fibonacci and draw from the low to the high, right? So you can see what happened, that the market went down, right? Gave us a better price, of course, cheaper price, a better price if you want to buy. So the market came down, right? And went below 50%. So I call that a discount, okay? A discounted level. So if you're looking at it for bearish scenario, it's called premium if it goes above 50%. But for bullish scenario, it's called discount. Of course, it went down, came down there, and then tapped that level, and of course, pump upward or start going upward. So that means if you wanted to buy, so this is where you would have placed the buy. But this one has passed. So let's look at what's happening right now. The market is still doing the same thing. Okay, it's still trying to give you. So after it tapped that level, it went up to more than 100% of the move, right? And tap this other level. So it has actually created a higher high. Come on, guys, you have to be saying these things because the market is trying to communicate to you. So the market has actually created a higher high. So that higher high, guess what? Is a bullish condition. Is a bullish momentum. Okay. So right now the market is trying to give us another opportunity, right? It's trying to tap below this 50%. So guess what, guys? So if this price can come down further and further into this area, it means it's trying to give us another opportunity, okay? Because we have already seen the shift. You know, normally you want to think USD is weak. Yes, it's very weak. But guess what? From what we are seeing right now, it can be weak, but JPY may not be as strong as, okay? So if it comes anywhere around this area, for you that ask the question on USJPY, okay? If it comes anywhere around inside this zone, then I may want to start looking for. Now I will not buy immediately. I'll look for a bullish signal, right? Because you notice this price has been falling, so you don't just keep a blind eye to that. So this price has been falling, right? Fine. So if it comes inside here, I want to look for a change of character. Okay, I think I demonstrated change of character the other day, but let me demonstrate it again. See what I mean by change of character. So once I see a change of character inside here, then I want to take a buy. So see what I mean by change of character. So quickly, if market is going down, see what I mean. So if the price is going down, something like this. Uh-oh. Having some small challenge in drawing. So see what I mean by change of character. If the market is going down like this, of course, this is how the market move when it's going down, right? Impulse to the retracement to the upside, impulse to the downside, retracement to the upside. So that means it keeps on respecting this high. It doesn't want to go above this high, right? So impulse again to the impulse again to the downside. As it's coming down, it has to take out this low, right? So taking out this low is what we call a break of structure. So see what I mean by change of character. Then at this level, inside here, I would want to see something that looks like this: the market retracing upward, and successfully take out this high and do something like this, right? So actually, it's supposed to respect the liquidity here or the money here, but it took out that money, right? It took out the high. So after that, then I'll wait for retracement. So once this price move up and take out this high, so I want to be seeing something like that here in either 30 minutes time frame, okay, a lower time or 15 minutes time frame. So a retracement again to this area, then I want to start doing the buy from here. So actually, sir, so it's something like this. It's a market structure that looks like this that I'll be looking at here inside this box. So that is why in trading, waiting is trading. So that means I want to wait until I see this inside here. Don't forget, guys, you may want to write it down. It's not only when you click buy and sell that you're trading. When you're waiting for something to happen, so it's also trading. It's also trading. I saw somewhere they wrote the other day, they said trading is 90% waiting, 10% buying, 10% selling. So you wait for the price to come to you, right? That's for professional traders. But for new traders, they just jump in, buy and sell, buy and sell, buy and sell, and they don't do well. So for professional traders, you wait for the price to come to you. So inside here, please. Now, I think that's for USD but let me go down to lower time frame for intraday. That analysis took enough time. Time is running really fast. So remember, look at that shaded portion, right? So the shaded portion is still showing on the 15 minutes time frame. So I want to see something like that. See, that drawing I did, right? Look at it here. It's showing here. This impulse to the downside, guys. This is retracement to the upside, right? It's showing here. Just in case that drawing was a bit confusing, this impulse again to the downside to take out this low, right? To form now is it has actually taken out this low. So we're having an impulse to the downside. So it may, let me just predict here, it may go up like this. Then of course, dump again inside this area. Then of course, I want to see something that looks like this. And not just like this. No, I will not want to buy here. I want to lose some. I want to see something that went as high as taking out this high. Yes, then of course I'll wait for a retracement for a better price, a cheaper price inside this area back or anywhere here. Then I want to buy it. So this is something like this I want to see, guys. Okay, please. I think we are done with this one. It took our time. So let's look at gold. Let's look at gold. Let's look at gold, please, because I would really like to touch gold, guys. So look at gold here. So I think I've already drawn all of these, so I'll not waste or use time to explain this again. So gold have shifted to the upside, as you can see clearly, right? That shifted to the upside. Okay, so this is where we got the shift, right? So this is where the market shifted. All of these are called internal structure. The market have shifted, retracement to the downside before it started pumping upward. So the market is trading upward. So directional bias for gold, guys, is bullish. So if directional bias is bullish, so you want to look out for buy opportunities. Okay. Now, as at that yesterday, we saw this, right? We saw where the market did something like this. So as of that yesterday, we saw this. So we saw where the market moved up, right? Now we saw this retracement. So this is the retracement we saw yesterday. The market retraced, and came just below my 50%, right? And tap this level. Guess what? If you are having if you are having a buy, right, or you're looking for a change of character inside this box, guess what would have happened? You should have picked your trade and of course start going up. So that you start believing in this analysis. So it came down inside here, then from just below 50%, started going up. So gold is trading to the upside, but guess what? The market is already rocking this proven resistance. So let's go down to a lower time frame. Gold is trading to the upside, but the market is at a resistance. So at resistance, what do? We don't want to still buy, right? We want to respect the resistance. We don't want to still buy. So we want to wait for a breakout, or want to wait to start trading the market to the downside. Now, how do you wait for start trading market to the downside? It means the market must show you that the market has shifted, okay, to the downside. But right now, we cannot take any trade on gold instantly. So what we can do is we can just wait with using our support and resistance level to wait, okay. So I'm already seeing, so we have a support level here. I can see a support level here, right? So that will be a good area to wait for the market to come down a little bit. Then of course we have another, remember, support because we want to buy, right? So we have another level here. This level, this level. So you want to buy if market can retrace a little bit more. Okay, this level is good. So you want to buy if the market can retrace a little bit more around this price level, right? Around 1958.30, around this area. So 1958 or 1957, around this area. So wait for retracement, guys. So let me jump further to a much lower time frame. So you are to wait for a retracement. The reason is at this top, we're already seeing a bearish engulfing, right? So that suggests that the market will want to come and consider this support level here. Okay. So we are waiting for the market to come down a little bit, and of course tap this support here. So coming down to tap this support, the support will now act as a double bottom. So something like this. So we already have one bottom here. So if the market should come down again and tap this area, to not be a double bottom. Guess what? Once there's a double bottom created, traders want to jump in, right? Traders want to jump in with buy. Okay, so around this area you can do a buy. The next level you can wait for is this other level. It's called verify support here. So my software have detected it as a verify support level. So if it comes down around this area too, I want to buy. So let me call the price level for you. So around this area, so around this area, 1954. So I wish to buy here and also wish to buy here. Place gold on 15 minutes time frame, 1954. So there is a demand level there, right? So what we call order block is there. So I want to buy it. So you want to wait, sir. You want to wait for much retracement, okay? So you want to wait for further retracement. See what I mean? So further retracement like this. So you may want to enter a smaller lot size here so that you not miss out. Then of course, if it retraces further to this level, right? So you want to do a buy, right? You want to do a buy. But you have to wait first. You have to wait first. So I can see you there, Raphael. Thank you, Benga. Okay, thank you. Say you enjoyed the analysis. Thank you. You asking which software I'm using. Okay. You just support and resistance level. I'm using support and resistance level. Support and resistance level. I have a software. So maybe you can get it from your account officer. Okay. If you request it, you can get it from your account officer. So let me look at D30. D30. Let's look at what D30 is doing, guys. Let's look at D30. Okay, it's already 9. Okay. But it's well. At least you now understand how to analyze the market a little bit, and of course, how you can pick some trade by yourself by looking at the market structure, right? So let's look at what D30 is doing now. For D30, US30, that will be done. That will take some questions, will be done. So D30 gave a massive push to the upside. So D30 gave a massive push to the upside, as you can see. So a massive push to the upside, and it met this double relatively equal high, right? And of course it retraced to the downside. So let me look at a much lower time frame. Let's look at 15 minutes time frame. So on 15 minutes time frame for intraday traders, what we can see here is we already have a bullish engulfing, right? We already have a bullish engulfing here. So this big bullish candle is able to cover this. So because of that bullish signal we've seen on the H4 time frame, so I want to wait for the market to come back to give another opportunity, right? So that would be for the market to trade lower to this level, right? Before I enter a buy. So if the market can give me another opportunity to buy a little bit retracement like this, I would like to buy. But because we are already seeing a resistance level, right? So this is a resistance level. So where else can I buy? I will buy if the market can trade well above this level. So if the market can break this resistance that I want to buy. So guys, you either buy here 16106, right? Around this level, or you wait for the market to break this high. Why? We are seeing a resistance. So we don't want to buy very close to the resistance. Take note. We don't want to buy very close to the resistance. Then it's already 9, so we'll be trying to round up now. So for US30, US100, they are all bullish. So you want to look out for a buy signal, right? Buy signal. That will give you a directional bias. So if we have a retracement a little bit inside here, so I'm already seeing a bullish engulfing, right? So let me use my feed. So this is a bullish engulfing. This candlestick that was big enough to cover this one. So bullish engulfing. So if the market can give us a retracement further to just a little bit below 50%, I will want to do a buy, right? A little bit below 50%, I want to do a buy. So if the market can move down a little bit, so let me look for that on a much lower time frame, 15 minutes time frame. So 15 minutes time frame. So I would like to do a buy, guys, on the US30, right? Because I'm already seeing that the market is already on a support. As you can see, that it's already on a support, and to justify that claim, we're already seeing a bullish engulfing here. So a big bullish candlestick, right? That means the buyers took the market away from the sellers within the last 15 minutes. So I would like to do a buy, then of course use this level as my stop loss. So I would like to do a buy. So I would like to do a buy, right? Then of course use this level as my, remember this is for intraday traders, okay? Use this low as my stop loss. Then of course, use this high as my take profit. The reason is the higher time frame, sir, is on a bullish, it's on a bullish momentum, okay? So that's what we're trying to follow, okay? So if you have small money, you want to take this small trade, okay? It's very short trade. So guys, let me stop here. Thank you very much, guys. It's already past 9. Thank you for joining us on another exciting morning market review again. I want to believe you got some value from from the analysis, right? And of course, it was almost looking like raining. So, guys, thank you very much. Let me drop my number. Then, of course, I will see you at the other side. So, 09026264507. So, do well to reach out if you need some analysis videos. You can check on the Rally Trade website. You can check on you can check on Rally Trade on YouTube. Just type Rally Trade, you see it. Then, of course, you can also reach me. I can also give you some of them. So, this is Emmanuel. Okay, guys, thank you very much.